In 2025, Morguard demonstrated durable cash flow and a resilient operating platform. As we marked our 50th year, the company continued to operate with a long-term focus on value creation. Morguard's total assets under management at year-end were valued at $18.9 billion. This includes $11 billion in owned real estate assets across 156 properties, including nearly 18,000 residential suites and 16.7 million square feet of commercial space. The company's portfolio also includes $4.2 billion of managed equities and fixed income investments. Total revenue from real estate properties remained consistent compared to the previous year at $1 billion. Likewise, normalized funds from operations at $220.5 million was consistent as we navigated through a more challenging environment. Net operating income for the year totaled $562 million, a modest decrease of 0.9% from the prior year, primarily driven by a major lease expiry in Calgary. In our Canadian residential assets, average monthly rent growth was up a healthy 4.4%. In the U.S., we reported 1.9% growth in AMR, supporting our view that U.S. residential markets are generating momentum. Our residential development in the Port Credit neighborhood of Mississauga, Ontario, is proceeding well, with occupancy slated for autumn 2027. The well-located, highly amenitized property is a high-quality addition to our portfolio. Retail experienced renewed momentum in 2025, with the Morguard team welcoming the opportunity to replace underperforming department store space with higher productivity tenants. Morguard's Saint Laurent Centre in Ottawa, in the midst of a $25 million development program, welcomed several new formats from national retailers. H&M's new concept store featured both apparel and home collections. Adjacent to a new Sephora location, Saint Laurent also introduced a first-to-market flagship that combined Bikini Village and Levian Rose into an integrated dual storefront format. In office, our leasing network reported renewed interest as investments in tenant improvements yielded momentum, enabling our team to lengthen typical lease terms from 3 to 5 years to, in many cases, 10-year deals or more. Reflecting our commitment to innovation and high-quality relationships with partners, Morguard's Place Innovation celebrated a 10-year lease renewal with Genetec Inc., a leader in physical security software. Place Innovation also hosted the launch of Morguard's 3 Smart Building Living Labs, in partnership with Nokia and Canada's Centre of Excellence in Next-Generation Networks. The Living Lab initiative provides Canadian startups with the opportunity to advance technologies that make buildings safer, more efficient, and more connected. We continued our ESG focus on reducing our footprint, increasing impacts, and managing risks and opportunities. A highlight was our successful National Check-In initiative, championing mental health for Canadian youth. In 2025, we significantly advanced our growth strategy. In the first quarter of 2026, we announced a deal that sees Morguard and Morguard North American Residential REIT jointly investing $1 billion in a Canadian multi-suite residential real estate portfolio currently owned by TD Asset Management. Morguard will acquire later in 2026 an approximate 20% undivided interest in a geographically diverse portfolio of 106 properties valued at approximately $5 billion. The strategic relationship with TD Asset Management also includes the transition to Morguard of property management responsibilities for the entirety of the portfolio. Additionally, our disciplined approach to capital allocation and balance sheet management was further recognized subsequent to year-end with a credit rating upgrade to investment grade BBB low by Morningstar DBRS. This milestone reflects years of deliberate effort to strengthen our financial position and enhance flexibility. At Morguard, our focus remains consistent. We generate stable cash flow, protect capital, and grow where we see clear opportunity for our investors, clients, and the communities we serve.